All right, ladies and gentlemen, I got your watch list coming into July 9th, 2019, and I hope you're ready. It's game time. I say that because we got a down Friday, down Monday warning. This is either going to signal a top or a bottom for us, and I'm going to give you my 1000% watch list. I'm going to go over option trades. I am obviously speculating, but these are plays that I'm going to be really looking, and I want to talk about pushing to the wall, and I think they have really good opportunities here. I'm going to go over your keys for tomorrow and give a rundown quickly into what we have this week. As we already discussed, it's very simple, but I want to give context to what we're looking here with the Fed tomorrow and also in the next few days, and then the basic plays we need to cover. But before we do that, you guys got to do your part. Make sure you check out the live streaming channel, but more importantly, right here in the comment section, post your watch list below, any plays you're looking at, and then we are going to be live 30 minutes before open. We want to source information down here, and then we want you on the live streaming channel. We're going 30 minutes before open till close. Be there, post the news, everything. We're going to be covering all that, so I'm excited to see you guys there, hopefully. So let's get into it. I'm going to go over the plays too from the taste that we made, but tomorrow, the keys, it's the rubber band man, my friend. It could snap in either direction. We've been talking about this cat dog, the push and pull. If you're not familiar with what that is, we've seen it in the market. We've seen it in indexes where you have some indexes going up while others are going down, where you have people investing in some things that make sense to rotate and then some things it doesn't make sense why they're there. You're having a push and pull, and that is the literal definition of volatility, and I say that a lot. But picture the rubber band. Go take a rubber band and stretch it. When it does snap, you don't know which side is going to snap and where it's going to come into, and that is the whole point of what we had the trigger today. It's a down Friday, down Monday, and honestly, historically, this did not occur a lot until we've came into really 2018, 2019. I have another video on this, but it doesn't happen a lot, and the whole point is, there you see Friday, that was the close from Thursday. We opened up here, even though we had that run up and we closed right here, it was still down on Friday, and then today we still closed down again. But this is showing something about liquidity and how investors are thinking. It's now showing people getting out before the weekend and coming in on the first day. The only thing we could say as a caveat to this is that it has been the holiday season. We have all of that coming, but watch out for that, because what that signals is that in the next pretty much 7 to 14 trading sessions, when you see that cat dog, you see the down Friday, down Monday, what that is telling us is it's either signaling a new top or a new bottom. So, and I think that makes a lot of sense where we're at in the events coming up here, because it's either going to rally from here and make people get their minds shattered, and it's going to be awesome for some of the calls. That's why the 1000% watch list is in play, baby. But even on the downside as well, if there is anything bad from the Fed meeting, this could have an effect, and that is what we are waiting for. I believe tomorrow morning we're going to get a speech from Powell related to the minutes, or there's going to be an interview, and then we're going to get the minutes and then his interview. But then on Wednesday and Thursday is the congressional hearing and the review. What comes out from the minutes, and especially the review, it will be a big push. It could have that effect, but I'm not expecting any big moves on the market till Powell. And I think the Fed is really the only thing that could push things now, because I don't think it's going to be a groundbreaking speech, but it's going to give us insight into whether he's hawkish or dovish, and that's going to push us to that July 31st meeting here at the end of the month. And this is where it gets interesting, because the market is already pricing in cuts. That's why we're going up. As some would argue, again, the reasons why we're up or down now, it's hard to pinpoint it to something specific like that, because the markets are out of whack, and the cat dog is telling us that. But at the same time, though, with the markets being so high and the trade stuff, it's hard to tell if Powell is actually going to be really dovish and still lean to where the market is pretty much. And even Powell has said stuff like this in the past. Even Goldman came out today, and they're saying that the Fed is now responding to the market, and really it's losing its credibility, because again, if they do switch up from here, the market is going to take control. And what does that mean is that the market and where the price is pushing not philosophy, but policy, and the market could be driving the policy again. And Trump has been playing this game, and that becomes a dangerous market, because then the Fed is pretty much unable to do what it needs to do without creating some level of panic. And why is it panic? Because it is just going to be not what the market expected. It will be a whole different pricing in. So the market could respond to that. So that's why coming into this down Friday, down Monday, I think it's pretty good. But again, as the down Friday, down Monday says, if we're not seeing any activity, the volume was low today. That is going to be the key for the rest of this week to watch. Like I said with the Super Bowl analogy yesterday, it's looking like a boring game. This wait till the end of the week here, but we have a one more corner to round, I'd say, one more week, even two. Then we get the bank earnings, that on top of any of this stuff, and then getting closer to the Fed meeting, it is going to make things more clear. So this is where you guys need to stay alive and be ready to go. But those are your keys. I'd give a strong emphasis there to volume, and volume breaking past these levels in the support areas we're at. So watch out for that. But now into the plays, my good friends. We have on this chart, I'm going to focus here because I want to watch the ETFs, because now if we do have one more corner to round, in the last week in low volume has created this, weird volatility events. These are setting up good for plays, but also as just indicators that you could watch to give you an idea of the market. But keep an eye on TLT. Watch GDX and gold, and it started to make a move up there late day. It's still holding up, but these are what I like with all of these ETFs. As you see, especially TLT and gold, they're holding up. So even though, imagine when they were first running up and you didn't see this, the IV's through the roof, it holds down, it gets crushed, it still goes up. It's the same thing happening here. You're almost getting a whole month of staying the same. That's just pure time decay, and then volatility and expectations drops with it. So that's a good one. Watch IYR. I meant IYT instead. Forgive me. And I got Apple there on the list too. It's going to disappear after I put the next ticker, but watch them today. You could watch the other chip makers. I think, again, you had Micron and AMD leading, but Apple is going to be a very big bellwether. And the fact that it even clipped like 2.5% down today, that's going to be important. But instead of IYR, I meant IYT for transports. Again, we're even seeing the divergence still kind of pick up a little bit there. At least it could get worse. And that's where I'm saying you got to give it time, because although the cat dog's in play, a few more divergences could make things a-okay here as a signal to when to get in. Watch a guy like Malaysia. This is related now, and surprisingly, this was the 7th active traded stock today. EEM, does it stop when I put it on there? Nice. So I'm going to put that up there on the streams for you guys. But EEM, Emerging Markets, and they had their move today, and I'd keep an eye out for them, because if that further diverges, and you could even look at some of the other Asian stocks and how they relate, and another inverse, this is like the UVXY, the Asian stocks, Yang, and surprisingly, that has been going up, and at a pretty big pace comparatively, even though you're seeing the emerging markets drop. But if that does start to get exasperated, it could be a good play. But again, it is very, very volatile, and the IV is going to be high, so be careful on that. Next, there's a few set of different plays down here, but a lot of people talked about this. We've had this play, and we owned it for a while. Here is that stocks only. Yeah, so I could show you the options, and we could just make it the stocks. But you guys remember we bought this way, way long ago, a few months ago, and these are free shares. I think I only bought 50 shares. It went up. I sold. I got my money back, and these were just free. We bought them at like $10. But now, why did Soli go up today? They're coming into the report, or they're going to get the reporter data for the cellulite drug. Or excuse me, not drug. It's the same device. If you guys don't remember, the first time it went up and got approved, it was because they got FDA approval for tattoo removal. That same device now is also as an application, or it's cosmetic, to remove cellulite. So July 15th, they're getting the data from a 26-week study, and it's moving up ahead of that, because if that study is good and has good results, now they have both of their main products in play. Again, we already looked at the fundamentals. They're actually pretty good. So I like it, but I'm not adding anything more to it. I'm just going to be holding on to it, because again, we got them for free, and if it does go crazy, awesome. We'll see what those 25 shares could do, but we didn't pay much for them. So watch out for that one, as well as even Kern. Again, same situation, you guys. Remember, we bought this at $29. It went up to like 40, sold half the shares. So these are just 50 free shares. It's even saying I'm down $600 on it, but in reality, that was just pretty much all the profit there that we were able to take back on it. I'm still holding. Again, we bought it at 29, and I said I would purchase around 15. I will look to get into this. This is probably my favorite weed stock, but I'm waiting on it, because before I say 15, again, $10 is a crucial level, again, as related to the warrants and everything else, but I want to see how just the weed space starts to go. But the minute we start seeing rotation into the weed space and the rest of the companies do good, it's kind of been a interesting ride for them this last few weeks. Once we get clarification on that, I'm not in any rush since we have those free shares, then I'll look to add some right when the hype kind of comes back to it. So watch Kern. Next one we got up here, Fedex. It's related to transports. They made a move today, and this isn't surprisingly one of my 1000% plays, but essentially, if these start to slip in transports, again, CSX and all those, I talked about them yesterday, those are going to be important to watch. Next is going to be Pepsi, and now they had their earnings. I don't know what this was. I think the earnings are coming out tomorrow, but if in general, a lot of people ask if I'm going to play this, I'll see what happens after hours, if it is a surpriser, if it's big, but in general, the play would be setting up on Coca-Cola, because then Coca-Cola, regardless of what Pepsi does, it'll have some of the reaction. If it does surprise to the upside or downside, Pepsi does, then Coca-Cola could get a little boost or decline from that. But then again, it still is going to have its own earnings and could do what it needs to. So watch Coca-Cola, and that is it for these companies. And now these are going to be kind of the bigger plays and some random ones. And before I get in, again, I'm going to get into the option chain. I have specific plays for you guys. Well, they're the plays I'm watching, going for my frog hunt and pushing it to the wall. But here I made a play on this today, Booking. And I made the play because I haven't played it in a while, but at one point, they have earnings, and it seems like they're getting resistance from the last place they dropped at earnings. But the key with Booking, and I used to love to play the stock, it just is so prohibitively expensive, and the risk reward, it's high reward, but really high risk. Sometimes it's not always there if the music stops. So unfortunately, I was able to make a spread on it, and we got it somewhat earlier in the day. It was already kind of hitting towards a low. But surprisingly, it still dropped, and this was a big move for it today. But we did a spread on it. I spent $150 total. It's for August, so it covers earnings. I bought a $16.75 put, and I sold a $16.60, so pretty much $152 in. If it does go below $16.75, or if it goes to $16.60, I would make max $1,500. So I like it. It's like a 10 times, 1,000% risk reward. I got to play it on $152 for earnings on Booking. I'll take it, and it is $200 out the money roughly, but that's not really too big of a move there for Booking. Even again, from its earnings, it moved about $200, and even from the beginning of June till now, it was almost up $300 from there. So keep an eye out for that. If there is any cheaper plays, I will see what we could do on the spreads, even on the weeklies, but I like it. You're just going to need to be able to spread it out and have space there if you are doing the spreads to make sure you're getting the most from it. But I like Booking, and again, related to the dollar and currencies and their business model, that could really get affected. So watch out for that. The next two I want to watch are energy and oil related, but they're kind of in the same space. I want to look at coal, and it's funny because BBL, this is the largest coal company so far. The rest have honestly kind of really fell off the map since the Obama era and really the banning of coal, more or less. And it's surprising to see how it dropped the other day, and it's coming back now. But Trump announced today that they are going to revise some of the Obama-era environmental stuff, so that could be interesting. I don't know, again, if this dropped preceding that or not, but if it is anything positive or any move towards coal, these guys could benefit a lot. But then there is also the companies like Arch Coal and even Peabody, which have been really beat down, and they were really, really expensive at one point. These were the leaders of energy companies, more or less. So watch them. And then the next one I'd watch is also Marathon Oil, and then oil in general. We saw it kind of led the market today in a very interesting fashion, and I did not see that. I guess that was after hours. My gosh. But today you can see it kind of looked like the SPY more or less, but it led the SPY, and it was up while the SPY was kind of coming down. Then the SPY started to come up, and then it kind of held up, and then they finally caught up, but it really started to reflect the SPY at one point. So if that's tomorrow, then tomorrow could be a big gap if it does hold there. But again, watch that in general. But anything related to this environmental stuff and energy, it could have an effect. So I think that's going to be important. Then there is Amazon. This thing was a behemoth today. It just kept going and going, and surprisingly, it's been doing that on some of these days. Watch the days that it does perform bad, but I'd say watch kind of this hype coming into Amazon Prime Day. Given they're changing the metrics to Prime Day, I don't think it's going to be as good, and usually I think it might just be a buy the rumor, sell the news type event where people are going to buy it up into this event or hype, and I don't think it'll do as good. But watch, and we need to see what happens with it, and again, the relative strength, but it is coming to a crucial level near 1980 and 2000, so see what it does from there. And lastly, I want you guys to look at biomedical companies. So I saw some Chinese companies move today in this space, and it was very, very odd, and people haven't talked about this, but it was talked about a month ago or so. Relative, they even had Vice articles, just something with these pumps and cybersecurity and just all sorts of just even the regulation behind this industry, and they haven't really recovered. They do kind of look like some of the biotechs, but in general, watch Tandem and even A Biomed. I think this is a bigger one. It's there at the lows. We've even seen what happens when it could get some of that drop. So I'd watch these. I'm going to keep an eye out for these. I'm going to look for plays. I don't have them yet, but I want to keep my eyes out for them. So those are the plays to watch. Remember, post yours below. Let's see what we're working with. I better see you in the morning. And now we got the 1000% plays. So it starts with this. Push it to the wall. McDonald's isn't a good example. The first one I'm going to start with is Shop. And why I'm putting this on there, because usually I think it's prohibitively expensive. But the fact it's made its run up, it's kind of good and bad, because we saw the potential with what these contracts could do, but now it's at this high. It either has to break out for us to see it again, and if the pricing's too high, it's not too good, or that's it, the music stops. But the strategy here is push it to the wall. I gave a nice example, heaven and hell. If it ends by this date, that's your judgment day. If it ends in the blue, it's going to heaven. If it ends in the black, it's going to hell. Very simple. Most contracts go to hell. Sound familiar? But doesn't mean that there won't be opportunities, but if you understand this, you'll be able to play. And the whole idea is push it to the wall, is you pick the option you want, preferably one that just went up thousands of percent, that went in the money, and then from there, you don't buy it. You wait for it to fall out of the money, because when it does, as it gets pushed closer and closer to the time frame, and that's the whole idea. As you get closer to expiration, the idea is to constantly just keep finding the ones on the chain that you saw go up a lot in value, but then are on the borderline. And the point is, you want to get these right before, because pretty much once they fall at the money, you'll even see a lot of these in the morning. They might fall off really hard in the morning, and then they'll come right back into the money. But when they fall out the money, it goes to extrinsic value. People panic. But the closer it is to expiration now, the bigger that drop is going to be when it falls out of the money, and then it's going to make them really, really cheap. So you wait till those fall out and buy them. But again, I have a video on that. Search push the wall and you'll be able to find it. But I like Shopify. I'm going to be looking at both the ones here near the money, and I'm going to be looking at these ones at like 50 to 30 cents. They're a big distance out. But then, a lot of people were saying, oh, if I only got next week. So it all depends. I'm going to try to push to the wall, wait till Thursday to Friday to get some of these near the money at 50 cents, because these are far out. But if I did see something in the morning and it seems like it's just going to continue this rampage, I'm going to go for these 50, 60 cent ones. They're about $15 more than the other one, but we did our analysis on them today. The ones that even if you spent 30 cents last week and they were stupid out of the money, they still did a pretty good 1000% return. So I'm going to be watching those and looking at those, but those could have potential, especially if they show that they're not going to really follow along with the market. So that's a good one. The next one is Nike, because it did the same thing today. It went up. I think the options went up about 100% from open, but you could see some of them went 60 to 130. That's a pretty good gain. Or even 40 to 120. And again, it's a slow mover. The best part, these will be cheaper. And as you can see, these ones at the money, the minute it falls out at 88, it could come back down to this price really quickly and then come right back up. But watch the near the money's there. Oh, and that's that's the next week. Yeah, there you go. That's more like it. Yeah, these went from 20 cents to 110. This is about 600%. Same concept though. You wait till these fall out in the morning. If, again, one day decays, if it drops in the morning and it has any sort of quick $2 move down and then pops back up like we see a lot, these could come straight down and you'll be able to get them. So I'm going to be watching out for those. Nike is another one again. And all of these you see are on the call side. The same thing does apply, though, here on the puts. If we do see the market turn around, you will be able to do the exact same thing. But these ones have already fell out of the money. If they become into the money now, these are pretty good, and you again, we have a full week too, so that's the best part on the weeklies. But again, understand the danger of this. This is a very difficult and advanced strategy, so I really recommend you paper trade this before trying to do this with real money. Next, we got McDonald's. This one isn't as hot. This one, I'm just waiting for these. I want these 212s at 30 cents, the 215s. I don't think they really went up a lot, and there's a reason. You guys will notice. You've probably seen this pattern before. When you get the one, you're like, oh, this is the one that could go to the money. This one's right outside there, but it's doing this thing where it's not really appreciating. So, again, McDonald's is crazy. It could do whatever it wants, but I'm going to wait till they get a little bit cheaper or a move confirms. But, again, them on the call side is looking really, really good. Next, I got these. I couldn't get these today. I love them a lot. Even then, because right here next to the money, they're cheap. They were at 80. They did the same thing kind of like those McDonald's I just showed you. So that's what you have to get worried about, simply because the nature and distance between the stocks. Even though McDonald's has a $250 difference, Home Depot doesn't really move like McDonald's historically. So you're not going to get the same outcome or the same expectations, believe it or not. You know, McDonald's could do those $4 in a day or even $6 in a day. It took them about a week. But again, if it does start to break out and do good, that could be great. But I like these, and I'm going to keep these on the 1000% watch right there. And then lastly, our good old favorite, UNH. I wanted these this morning. I wasn't quite feeling them. They closed at 363? No way. So yeah, we could have got these at 40. They went up about 50%. However, I'm surprised they went up because that is showing something with implied volatility. They should have done that other pattern I showed you guys, but UNH isn't in a value stock, so that could give you a little bit more insight as to why the IV is allowing that one that's still further out do that, because it could hit that price. But watch them, watch for a drop. They're a slow mover, and they're hard to time on there. That's what makes it difficult. But UNH on the call side, again, like I'm saying, if the market does go down, they could want to rotate, and if it does, it could be a pretty big move, and I still like these. Again, we could always go for the ones really far out if we wanted to scale in. You know, I didn't want to spend those at $50, so I could either bite the bullet and buy these if I wanted to and be impatient, or I could buy one of these and then buy another one $20 later at the end of the week. But I'm still waiting, and I'm going to keep my eyes out for it. But those are your plays, guys. I hope you enjoyed it. I hope I see you in the morning, and let's go.